So if you really want to get what Bitcoin is all about, we're not going to start with a bunch of code. We're going to start with a crisis. You see, to get why this magic internet money was even created, you have to understand the world it was born into and the system it was built to challenge. Let's kick things off with a big question. What if you just didn't need a bank? What if you could be in complete, total control of your own money without having to trust anyone else? And look, this isn't just some random thought experiment. This is the absolute core problem that Bitcoin was created to solve. Okay, so our story really gets going right here in 2008. The whole world was just reeling from this massive financial crisis. And it was a moment that completely changed how people thought about money and, the powerful institutions that are supposed to be in charge of it. I mean, the damage was just catastrophic. This crisis didn't just shake people's trust in the banks, it completely shattered it. People felt completely let down, betrayed by the very system that was supposed to protect their savings and their future. So, right in the middle of all this chaos and distrust, something brand new, something really radical started to take shape. This was the answer to that crisis. Out of nowhere, this mysterious person, or maybe a group we still don't know, using the name Satoshi Nakamoto, drops this paper online. And the idea inside, it was nothing short of revolutionary. A peer-to-peer digital currency. Money that could work without any central authorities like banks or governments. It was basically a blueprint for a new kind of financial system, one built on pure mathematics instead of having to trust in institutions that had just proven they could fail. All right, so that brings up the big question, right? How in the world can you have money that actually works without a bank to check the transactions or a government to say it's legit? Well, the answer is a pretty brilliant piece of tech. The engine that makes all of this go is something called the blockchain. Now, I know it sounds super complicated, but at its core, it's actually pretty simple. Think of it like a digital record book or a ledger. Just imagine a giant shared spreadsheet that lists every single transaction ever made. But here's the kicker. Instead of that spreadsheet living on one computer at a bank, it's copied and shared across thousands of computers all over the world. So instead of one single bank controlling that ledger, it's maintained by this huge global network. It's open for anyone to join in, and since every transaction is public and locked down with some seriously strong cryptography, the whole system is transparent and almost impossible to cheat. And this right here really gets to the heart of the matter. With traditional banks, everything is centralized. A bank can decide to block a transaction or freeze your account, but Bitcoin, it's decentralized. There's no CEO, no company in charge, and that means you have total control. It's your money, and no one can stop you from using it. Okay, so the tech is super clever, I get it, but that still leaves the million-dollar question. Or, I guess the $21 million Bitcoin question. Why is this stuff actually worth anything? Well, it really comes down to three key ideas or pillars of its value. The first pillar, and honestly probably the most important one, all starts with this number you're looking at right here, 21 million. And that's it. That's the total number of Bitcoin that will ever exist. It's written into the code and it can't be changed. Think about that. Unlike our regular currencies, which governments can print more of whenever they want, Bitcoin's supply is fixed. It's finite. This programmed scarcity, this hard limit, is exactly why you hear people call it digital gold. The whole idea is that because there's a limited supply, it has the potential to hold its value over the long run. It could be a way to protect your savings from inflation, the thing that makes your money worth a little less each year. All right, the second pillar of its value is based on this really cool idea called the Lindy effect. The theory is actually pretty simple. For things that don't rot or spoil, the longer they've already been around, the longer you can expect them to be around in the future. Think of books or ideas. And with Bitcoin, you can kind of see this playing out in real time. It's been around for over 15 years now. It has survived all these predictions that it was going to zero, and it's not just some niche thing for tech geeks anymore. It's becoming a mainstream asset. We're seeing major financial products like ETFs, and even whole countries are starting to adopt it. Okay, so this brings us to our third and final pillar. And this one might be the most important of all. It's a bit more philosophical, but it applies to every single kind of money, even the dollars or pounds or euros you have in your wallet right now. At the end of the day, what gives any money its value? It's us. It's the fact that we all just agree that it's valuable, right? You accept a paycheck in dollars because you believe, you have confidence, that the grocery store will accept those dollars for food.
It's a shared belief system. And Bitcoin works on that very same principle. Its value comes from the collective agreement and the confidence of millions of people in its network all around the world.
So, when you put all of this together, where does that leave us? I mean, we all know Bitcoin's price is a roller coaster, and there are still plenty of people who are skeptical, for sure. So, what's the path forward?
Now, about those wild price swings, it's really important to put them into context. Almost every new disruptive asset in history, and yeah, that includes things like gold way back when, went through these crazy periods of volatility. It's just what happens when the world is trying to figure out what something new is actually worth. So yeah, the volatility is real, you can't ignore it. But the people who believe in Bitcoin will tell you that the case for it being around for a long, long time is really strong. They'll point to that game-changing blockchain technology, the powerful idea of being your own bank, and the fact that more and more people and institutions around the world are getting on board, all signs that it's here to stay. And all of this really leaves us with one last big thought to chew on. The story of Bitcoin really makes you step back and question what money even is. Because if value really is just this collective belief, this shared agreement, then the biggest question isn't just about Bitcoin. It's about what we, all of us, are going to choose to believe in next.